So what is the investor's dilemma?
The investor's dilemma is basically, where are you going to put your money, right? What are you going to do?
Hello.
Whether you're working in a job and you've got savings, or you own a company and you're saving money, or you've inherited money, or whatever your background is, you need to make a choice about where you're going to put your money and what you're going to do with it. And there's also things like, what do you need from that savings, or what do you need from that investment? Like, it's great to squirrel away things for the future, but what happens if you need to pay the rent today? What happens if you need to pay the grocery bills? What happens if you just need extra money because inflation's high and you can't afford, the cost of living? You need an extra 10, 20, 30% a week. Well, you need to look at all the opportunities that are available to you. And there are lots of opportunities available to institutional level investors or sophisticated investors. Usually a sophisticated investor in Australia has to have a net worth of $1 million or more, or a $250,000 annual income, which basically prices most people out of that. So most of the double-digit returns that you're able to get anywhere in the world aren't available to the average person. And to Bitcoin, right? We all know that the CAGR of Bitcoin is around 40 to 45%, right? That's the compounded annual growth over the last around 11 years. Absolutely fantastic. But you still need to sell it, right, at some point if you want to realize those gains. And then we have the other problem of the cycles, right? Bitcoin has extremely volatile cycles, big booms and big busts. Problem is, most retail investors are going to buy at the top and sell at the bottom, right? Huge problem. Most people are losing money. Again, it's always working in the favor of the institutions or the people who are highly sophisticated. This is where we step in, where we've built a system that enables us to extract that value on a daily, weekly, monthly basis. So we're kind of price agnostic. We're also kind of cycle agnostic. No matter what the market's doing, we're able to generate returns. And, we do that in two ways. Like I said, we're able to either use the Bitcoin that we have as collateral to trade with, which is almost like earning a yield on that Bitcoin, which is pretty amazing, because then you can use the profits that you're generating and you can use them in the real world. It's like getting rent on your Bitcoin, or simply go, I just want to use Bitcoin and its volatility to generate income like a business would, right? And then you've got a side hustle going or a separate business going. So these are two kind of things that we've seen a huge problems that need fixing, right? And that's like, it's great the Bitcoin's out there and it's great that it's going in a certain way. People need to be able to, at some point, do something with that money, with that paper wealth, without having to sell down that asset, right? You don't mortgage your house in order to pay the bills. So we need to be able to generate rent, right? That's basically what we're talking about here.
Yeah, it's really cool. And obvious examples being, if you own an equity and that equity pays a dividend, then you have a yield on your equity. Equally, you own a piece of real estate and you rent it to someone, the rent equals some yield on the asset that you own underneath that. Right. When you own Bitcoin in self-custody, it's digital gold and it doesn't have a yield. People would always complain, like, why do people buy gold? It doesn't yield anything. Why would you even do that? And I'm personally very comfortable with owning as much Bitcoin as possible in self-custody, and the multiples that it can potentially return completely outweigh any other area that you might want to deploy capital, in my opinion, especially from a risk-reward perspective. And so I feel like what this might be is an additional tool in the toolbox for a percentage of your portfolio to generate some yield. Yeah, so I'd love to understand how you think about let's say you were complete Bitcoin maxi, balls to the wall, 100% all in. Like, what percentage of that 100% might you put towards a trading system?
It's a great question. And we get a lot of these questions from people and they're like, I just want to buy and hold it. And it's like, it's just a tool, right? What we have is a tool. It doesn't replace what you're doing. The fact that we're trading Bitcoin doesn't mean that you should sell your blue chip stocks, right? You don't need to do that. That's fine. You can keep them and also trade Bitcoin, right? Doesn't mean you need to sell your company and use all the money to trade Bitcoin. No. That's it's just a tool. And that's a really important thing to understand, right? It's just a tool, and that's what you use. So one of the things that we do when we work with our clients, and look, I'm also trying to really make the distinction between a trading system and a trading bot. We use trading bots to execute what we're doing, because what we've actually got is an automated trading strategy. But this trading system and the strategy itself is more like what you're talking about. It's about portfolio allocation, position sizing. When do we deploy the capital? Where are we in the cycle? And we do help with those things as well. So to answer your question, I always ask another question. It's like, well, you tell me, how much money do you need extra in the year, right? We can reverse engineer it. We know, and it's quite predictable, what percent returns that various strategies that we have will return, right? Well, then we simply go, okay, well, this is how much capital is required to generate what you need. So that's how much we suggest you should deploy. Keep the rest in cold storage, right? Just deploy what you need based on what your goals are. Don't listen to other people. Don't worry about what they're doing. Just worry about what you need. And that's basically what we do, just reverse engineer it.
Great. And that's a good reframe, because at the end of the day, all these decisions that you make, only you are accountable to them. And in some ways, that's the beauty of capitalism. If your money's gone, mate, it's gone. Yeah. Now, ironically, we live in a system in which actually there's a lot of actors out there that know that they can get it very wrong and they will get bailed out. And that's the wild nature of how the financial system's actually built. I don't want to go on a big rant about like the macro case for Bitcoin necessarily. I'm more really interested in what you've actually built, because it's fair to say that since we spoke about it in person, I haven't looked closely at it until the research I did for this call, and I'm really impressed. In particular, when I saw some YouTube footage of you pulling apart your trading view and how you've got this kind of preset allocation sizes that are very small, but you've got like 97 of them. And then the strikes that were being made, you were confident of being right, like 96% of the time or something. Yeah. So if you could just teach me a bit more about, let's say I was signing up as a customer, what do I actually get?
Yeah.
And the wider picture being, I'm extremely dubious of people selling yield, in particular when it's like, woo, if you just give me your Bitcoin, you can trust me and I'll give you back 3% or 10% or 5% or whatever. And the likes of BlockFi and Celsius and all this kind of stuff that went very, very wrong in the not too distant past. How does Minotaur kind of differentiate to that?
Yeah, so firstly, the biggest thing is that you never give us your money. That's just the absolute biggest
I love that.
thing.
Yeah.
You never send us a cent, right? The whole way that we set it up is we share our algorithm with you. So we've written a very complex algorithm, and that we're able to share that with our clients through TradingView, which is TradingView's one of the charting websites in the world. So we're able to just share that with you. And then what we're also able to do is, using our software, is connect that algorithm, which is essentially the signals, the buy and sell signals that we're generating. We're able to connect that to your exchange of choice. So we actually connect to pretty much all the major centralized exchanges in the world, whether it's Bybit or Binance or Coinbase in the States, Kraken, you name it, we can do it. And we're also working on a decentralized solution using Hyperliquid on Arbitrum. So that's going to be an exciting thing that we're going to be deploying later in the year. So yeah, the first thing is that I agree with you. If anyone asks you to send your money to generate yield, never do it, right? We've seen that happen last cycle. It completely destroyed people. Now, all that we're doing when we're saying using your Bitcoin as collateral is we're just taking advantage of a specific functionality of the exchanges themselves. So to use two examples, Bybit has what's called a unified trading account. Binance has a multi-commodities account. What that means is that you're able to trade futures, perpetual contracts, and derivatives, and you're able to do it instead of depositing USDT like a normal bank account, and you go to your broker, here's $1,000, I want to start trading. These platforms allow you to deposit Bitcoin or Ethereum or Ripple or whatever it is, XRP, and you can use the value of that token in order to then trade with, right? So we're just taking advantage of a functionality that's built into the centralized exchanges, or we're showing you how to do it. And then effectively what you're doing is you're borrowing against that asset in order to place the trades. Now, that particular setup using the collateral to trade with is a little bit more advanced. The average person, we always suggest, is just use the dollar amount, right? Bring in USDT and trade Bitcoin with it for USDT. That's the simple way to do it. But obviously, if you do it with Bitcoin as collateral, you get a double upside. You get the upside of Bitcoin if your timing is right, which this cycle was around 6.6x from 16K to where we are now, 110, wherever it's going to go. Again, I think there will be diminishing returns, and we can come to that at the end of the call, my long-term outlook. But what we're able to do is just use that Bitcoin as collateral and trade with it. Now, are you earning a yield? No. You're actually trading with it and you're earning USDT. Would you call it a yield? Maybe, right? But it's always...
They're short-term trading profits, essentially.
Correct. So it's not a yield, but technically you are earning a percentage because you're using that collateral and you're getting a return against it. So call it what you will. We never touch the accounts. You always have complete access. You can stop the bots at any time. You can draw all your cash at any time. So this is one of the biggest, I guess, the differentiality. We're not some kind of Web3 application where you're staking your funds in. We're doing this simply through the centralized exchanges, and we're just taking advantage of the functionality available to anyone.
Awesome. Well, shout out to my friend Jigs. Years ago, he was working on a trading system of his own, and he contacted someone in Eastern Europe who wrote some code for him that he plugged in the back of TradingView. And I've had automated signals to buy and sell, and we've been very much playing around with that. And for us, I say for us, Jigs has developed the system himself. He's become almost like a hybrid long-term investor, where he's really working over like multiple year hold frames. And so the need for an AI bot in that scenario, because it's not high frequency at all. It's literally like, yeah, okay, I'm going to ride this for however many months, years, and the position is then sold out, and then it works differently. What you're explaining here is the same thing. It's like you're the person logging into TradingView. Here is our IP with our algorithm that goes in the back of TradingView that you purchase. Is it a one-time purchase, or do you pay like a recurring monthly?
Yeah, so we have a licensing fee for the algorithm, and then we're going to we've got our software where there's a small recurring subscription for the software.
So there's no like carry. So it's not like, we'll make some of your profits. So you're not taking people's money in that sense. You're not a discretionary manager of their funds.
No.
Like I had an old podcast, and I interviewed a guy who was a community manager for Celsius, who said, all you've got to do is trust us with your digital assets, quote unquote, on the pod. And it's like, cool. That went really spectacularly badly. And so here I'm reminded of that phrase of like, feed a man a fish, he eats for a day, teach a man to fish, and you feed him for life. And in this case, instead of teaching him to fish completely, you're like
electric fishing rods.
Yeah. Yeah, here's the super trawler.